If you want commercial real estate, the least amount of tenants, the lowest risk, and the quickest path to cash flow, then buy this one kind of commercial property, make you the most amount of money. My real estate team's done $1.6 billion transactions over the past few years, and I've seen about every kind of deal under the sun, and this one takes the cake. I'm going to break down A to Z, how to do it, what to look for, what to expect, and how to make the most amount of money in your first deal or your next deal when you buy this asset class. Now, also at the end of this video, I'm going to break down as well for you probably the top 2 or 3 contenders for this because I see so much misinformation out there on what to invest in and not to invest in. And you want more help, more support, and hands-on holding for you, down below, look in the description, call me directly, walk you through exactly how to do the best transaction, answering questions you have specifically, but no obligations. But I want to give you that first little caveat, just kind of help you as much as I can, then show you what I think are the best ones. So often, you probably hear people say, your first property you ever buy is multifamily, which I think, at one point in time was probably true. When there was not a whole lot of competition in multifamily, I would agree with you. But now finding good multifamily deals can be kind of a headache. I still think it's one of my top favorite kinds of assets because it's super scalable, it's super easy to do, and it works for a lot of people. Some say storage units, super good, high cash flow, mostly a land play. But we're looking at all these different options. If you're brand new to this, you have no experience with management, with understanding underwriting, sourcing deals, finding loopholes, seeing CapEx or even OpEx, and that sounds confusing to you, then this is why I think this is the best one to do. You want to find some kind of retail that is triple net, more often than not to one single person. And what I like to do is find places that are going to be to the masses. It could be a bank, a convenience store, it can be a gas station. You want to find some kind of place that is literally a triple net to one person that is inside of a good industry. Like if it's hospitality, like restaurants, probably not. If it's storefront in a small city, probably not. So there are nuances to that. Like auto shops, depending on where they're at. I want to find places that are like a long-term place, like a Dollar Tree. This is 2 tenants. I think it's also really good as well. Having one tenant sometimes can be a big mishap for you. If they don't get leased out, you're kind of out of income. If you have 2 places, 3 places, maybe 4 or 5 places in there, you have more options now to have some leeway in case things go awry. And in real estate, in any business for that matter, things almost always go awry to some degree. So CVS pharmacy, you have $7 million, probably pretty good. Now, obviously, if this is your first transaction, first couple of transactions, you may not have that much income to invest into a massive deal for $7 million. But don't be alarmed. There's still deals out there. You can see here, we're seeing deals for Dollar General for $1 million, 7.5% cap rates. You have 1.5 for this place. You have 350 for the shortstop. Again, not my favorite kind of deal to move forward on. Another Dollar General for $1.3 million. These places are going to be really good staples. They're going to be in supply demand. This is 1 day on market. NOI is $88,000, so meaning it's probably like a 6.85% cap rate, give or take. This here, 6.85% cap rate. Lease terms 15, main terms 5. Great. So when you buy this property, you will start making money day one. There's no management. Triple net is amazing. Up above, a whole video breaks down for you as well what that means. But mostly this means that they cover the taxes, they cover the CAM, and you also get paid rent as well. Triple net means these full kinds of incomes, technically 3 other than rent, but it helps you a lot, and also insurance. So these kind of places, I think, depending on where they're at, are great investments. Now, obviously, when you're doing this, first step is like, okay, let's find out, where is this on the map? It's on the highway or on the main road, it looks like. Love seeing that. That tells us that's probably going to be pretty used by a Walmart and a Dollar Home Depot. Let's see the city. Okay, the city's, not too small, on the outskirts of Houston. So it's probably going to be used quite a bit. And then we come to the map as well and see who are our customers. What kind of homes are nearby to this property? So you got some houses over here, some more houses over there. Again, you want to look at all the regions nearby and see exactly who's nearby, who your clients, who's going to be using you as a storefront. So your whole goal is to have no management. With apartment complexes, storage units, all great asset classes. But for your first one, it's going to require a lot of time out of your life. Even with a property manager, people will be calling you, things will be breaking. Whereas for this, they cover almost all that for you. It makes it so nice. Now, on top of that, let's kind of see what it looks like in person or on virtual person. So you can see here, there's McDonald's nearby. Maybe it's over there. Yeah, warehouses over here. And you're looking at a map, you want to look at this and see exactly what's going on, kind of from the bird's eye view. Obviously, see it in person too. And these kind of deals, what's nice about them is you can invest in these anywhere across America for the most part. So it won't take a whole lot from you directly. It's just mostly just going to be a cash flowing machine, help you get big returns. Now, 7-Eleven, not my biggest take there, or gas stations, not my biggest take there. People do them a lot. I like finding Dollar Generals and stores like that. They're pretty solid. Lowe's, these kind of places are great. You can see here almost all the same price, 1.4 for about all the different areas. 1.2, 1.3, 1.4, 7.5% cap rate. This is a 7% cap rate. They're going to be on the market for 9 days, all brand new. One of those connected somehow. And if they are, I want to kind of see how can I negotiate these people less? How can I make this an 8, 9, 10% cap rate for you? And then add in our triple net. See, absolute triple net, single tenant, triple net. These are good ones. So this is the best one to do. And then from there, when you're looking at these, you want to find out what are the numbers, the financials. I want to see the OM. I want to see if the rent roll, like one person. I want to see the lease agreement. I want to see how much traffic they're getting. I want to make sure that during the past 12 months or 2-3 years in this case, how has their income been? Has it been stable the whole time? Has the store been making money? Because just because it is a business like Dollar General, which is a pretty good staple, does not mean they had not go under. I've seen stores close all the time. So you want to make sure you know exactly how much money they're making. You want to know if they're having bad months. You can see the current lease terms. And what's nice too about these long terms, a lot of times they're going to be, one, renewing because they don't want to move businesses for no reason, and two, almost always increases as well. So 10% and options. So increasing every single time with more income for you. Option 1, option 2, option 3, kind of see how much money you'll be making every single year. So by the time it ends for the last 5 years, you have a 9.2% cap rate. And then you want to go for the financials, see the population. It's kind of a small city. I'm not a huge fan of that. And really do your due diligence. But these are probably going to be one of the easiest deals you can do as a commercial real estate investor. Now, it's not super sexy. It's not apartment complexes. It's a really boring business. But these boring businesses are what you're looking for. So that tells you it's going to have a pretty good return for you long term and a little stable. It's one person, no headaches for you, no management for you. And those are the deals that you're looking for. Now, I will also add, when you're doing these kind of deals takes also a lot less underwriting. Like when I'm underwriting for my clients, these huge complexes, these massive storage facilities, all these places like that, it takes way more work. This one is 10% every 5 years. It is a 15-year lease, so by option 3, 9% cap rate, all pretty standard. You can really see what's going on. Of course, I want to do some more due diligence, and I want to see how big is the area. But this is a great way to do it. And if you can, obviously, go even higher, like finding like a Starbucks to do as a one-tenant place that's triple net as well, and you know they're good for it. Same for Dollar Generals. Now, is it a corporation you're leasing to, or is it actually a person who bought the business themselves who have the different terms? So you guys want to know that as well. But I will say for you, for easy cash flow, quick income, those are probably your best bet. Now, I did say to you, you're still watching this video, there are a number of contenders that are also good for you as well as a first-time investor. Now, I will say apartment complexes are good for first-time investors. Just know that like there are lots of competitions out there. Storage units, I think, also a good first one as well. And then the last one, so we have multifamily, we have our storage units, and the last one is going to be industrial. Industrials can be flex spaces, warehouses, distribution centers. Let's do these 3 are really popular ones. Same price range. You can see here we have places for $1 million, 1.1, 1.15, 1.75, 1.6. And what's nice about these is, one, they're easy to build. So you want to build them yourself, having a big flex space, not a lot of work. Number 2, what's nice as well is they're really similar to our last one. Like what we just did, retail and flex spaces and these, you're having one major tenant, and makes your life a lot easier when you're doing them. Here we go. So these are all flex spaces, warehouses, and so forth, given off to one person, and it makes your life so smooth because you know that to find a tenant, one person will not be super hard. Having opportunity zones is also really good as well, and they're really going to be a great turnkey asset for you with no work, good returns, stable amount of money. You probably can't do a whole lot of value add because obviously it's a business you're doing. Unless you're doing industrial, you have more options there. I think this is probably a strong number 2. Like the first one, you're going to be all retail, triple net. Option 2 for like the strong second one, and be places like industrial like this, that you know is one super long, sturdy tenant for you. 6% cap rate, triple net as well. Those are the 2 best. And then after those, when you understand finances, understand the financials, have to understand working with these deals, then you can kind of move into doing like a multifamily storage unit deal instead. If this is helpful for you, you want more support, more strategies, over here the whole video breaks down underwriting in more detail for you, A to Z for that. Down below a whole playlist for you too, helping you understand all things commercial real estate. And of course, this is the easiest way to invest in commercial real estate. But one easier way, down below, link in the description, that will call me directly. I can walk you through the best strategies, help you earn and make more money in your next deal, guaranteed. We've done this time and time again. We've saved the middle clients millions of dollars collectively across all of them over the past few years. Hopefully you'll be next. Until then, make sure you like the button down below, share with your friend, subscribe. I'll see you at the top. Have the best day yet.